A 42-year-old man walks into a bank to open a savings account. The banker smiles and slides a form across the desk. Right there, in bold letters, annual income. He writes down $87,000. 3 weeks later, his mailbox is flooded. Credit card offers, personal loan invitations, investment pitches he never asked for. What he didn't know is that one number just put him on a list, and that list is making someone else a lot of money. In the next few minutes, you're going to learn exactly what happens when you tell a bank how much you make. You'll see the 3 ways they use that information to profit off you, and I'll show you a simple strategy that keeps your financial privacy intact while still getting the accounts and services you actually need. Stay with me, because by the end of this, you'll know more than most people learn in a lifetime of banking. Let's start with the truth most bankers won't tell you. When you disclose your income, you're not just proving you can manage an account. You're giving them permission to build a financial profile on you. Here's how it works. Let's say you're 38 years old and you tell the bank you earn $78,000 a year. Within seconds, their system flags you. You're now in the mid-income, credit-worthy, likely to carry debt category. And that category is gold to them. Within days, you start receiving offers: a personal loan at 9.5% interest, a credit card with a $15,000 limit, a home equity line you didn't ask for. It all sounds helpful. But here's the hidden truth. These offers are designed to turn your income into their revenue. A person earning $78,000 who takes a $10,000 personal loan at 9.5% interest will pay back $11,850 over 2 years. That's $1,250 in pure profit for the bank. Multiply that across millions of customers and you start to see the bigger picture. Your income isn't just a number, it's a targeting tool. And here's the part that shocked me when I first learned it. In many cases, banks don't even need your income to open a standard checking or savings account. Most people assume income disclosure is legally required. It's not. For basic deposit accounts like checking and savings, federal law does not mandate income reporting. The Bank Secrecy Act requires identity verification, yes, but not income. So why do they ask? 2 reasons. 1, it helps them cross-sell. 2, it builds leverage. Let me give you a real scenario. A 45-year-old teacher in Ohio, earning $54,000 a year, opens a checking account. She lists her income honestly. 6 months later, she applies for a mortgage. The bank already knows her salary. They know her spending habits. They know her debt-to-income ratio, and they use all of that to determine how much interest they can charge her. She ends up with a 7.2% rate when she could have negotiated for 6.8% if she'd kept her cards closer. Over a 30-year mortgage on a $250,000 home, that 0.4% difference cost her an extra $23,000, all because she gave away information she didn't have to. Now you might be thinking, but don't I have to tell them something? Not always, and that's where the strategy comes in. Look, I get it. Walking into a bank and refusing to answer questions feels uncomfortable. You don't want to seem difficult. You don't want to be denied an account. And honestly, most of us were never taught that we have options. But here's the thing. Banks aren't your enemy. They're businesses. And like any business, they're designed to maximize profit. That's not evil. It's just reality. Once you understand the game, you can play it smarter. You can protect your privacy without burning bridges. And you can still get every service you need on your terms. So here's what you do. When opening a basic checking or savings account, you can politely decline to provide income. Simply say, I prefer not to disclose that for a deposit account. Most banks will process it anyway because they legally can. If they insist, ask why it's required. Often the representative will realize it's optional and move forward. If it's truly required for a specific product, like a credit card or loan, then yes, you'll need to provide it. But for everyday banking, you have leverage. Now, let's talk about credit applications. This is where income does matter, because lenders use it to assess risk. But even here, there's a smarter play. Instead of volunteering exact figures on every form, you can provide income ranges when allowed, or only disclose what's legally required for that specific transaction. A 52-year-old contractor in Texas did this when refinancing his truck. Instead of listing his fluctuating annual income of $68,000 to $95,000, he provided his 2 most recent tax returns as proof of income only when the lender specifically requested documentation. He avoided pre-filling income on comparison websites and marketing forms. The result? Far fewer junk mail offers and he maintained control over who saw his financial details. And here's the bigger principle: your financial information is currency. Spend it wisely. Imagine this: you're 60 years old, you're sitting on your back porch, coffee in hand, watching the sun come up. No debt collectors calling, no credit card offers you didn't ask for, no feeling like the system is quietly draining you while you sleep. You've spent the last 20 years protecting your information. You've banked smart, you've borrowed only when it made sense. And because of that, you've saved thousands in interest, avoided predatory offers, and kept your financial life private and peaceful. That's not a fantasy. That's what happens when you stop giving away power for free. When you realize that every form, every question, every required field is a negotiation, and you have more control than you think. This isn't about being paranoid. It's about being informed. It's about treating your income, your credit, and your privacy like the valuable assets they are. Because in the end, financial freedom isn't just about how much you make. It's about how much you keep and how much you protect. If this changed the way you think about banking, you're already ahead of most people. The next step is simple. Go through your current accounts, look at what information you've shared, and ask yourself, did I need to give that? From here, you might want to learn how to audit your credit report for errors, or how to negotiate better loan terms using the information you now control. Those are the natural next moves. Take them when you're ready. And remember, every small decision you make to protect your financial privacy compounds over time. Just like interest, except this time, it's working for you.